What's going on, brothers, and welcome back to Brotherhood Finance. The economy is collapsing before our eyes. In today's video, I'm going to be addressing why I believe this is the worst stock market, real estate, and crypto collapse of our life, where I think things are actually going to be headed in the future. We're going to be looking into a lot of information in this video today, so make sure to stick around for that. We're going to be diving into the numbers, the PE ratios, what I think Fed's going to do, and a lot of other information to prepare and really get a foresight of what I believe is ahead. Furthermore, before we dive into all this information, make sure to smash the thumbs up button down below, subscribe to our YouTube channel, and furthermore, let's dive into this right now, brothers. Now, if you look right here at the slide, IXIC, SPX, this was the day after we had that huge pain in the markets when the S&P, the Russell, and the NASDAQ was down roughly 4 to 5%. So when you have days like this in the market, and we don't have a big bounce back, typically that is a pretty worrying sign overall. Why do I say that? Normally because when you have those big downward spiral days in the equities market or in the stock market, the following day we usually have a bit of a bounce back to then, get back some of those gains that you lost. But now we are not seeing that, and I still think we're going to head down even more and more. And we're going to be diving into what industry is going to get hit next and what are things getting hit right now. So if you look at this slide, this is the day that I was talking about. The S&P was down 3.42%, the Russell was down 4.44%, and the NASDAQ was down 4.22% as well. If you look at ETH and Bitcoin, they have been getting destroyed in the marketplace. Again, as I mentioned in other videos, crypto has never really been through a true recession. So it's important to keep in mind that this will be the most likely the first recession that cryptocurrency has been through. It's very volatile and leveraged as well, as I still believe in crypto in the long term. Right now, I am keeping an eye vision on around $18,000. If BTC can hold $18,000, that will be a good sign. If you follow, the pi cycle top indicator and the halving cycles, roughly it's showing that $18,000 should be our bottom. However, I do think we'll break below that, and then we'll see BTC drop quite significantly further and drastically, given the current economical circumstances that we are in. So that is my opinion for crypto. We gotta keep an eye on 18,000. As far as the NASDAQ, S&P, Russell, I do see more pain ahead. Let's dive into more slides right now. Now, if you look at the Russell 2000 index on a 5-year chart, you will see that the Russell is only up 21.4% in the past 5 years. That is craziness, brothers. The reason that is crazy is because typically you see a lot more gains over 5 years than just 21%. Now, let's dive into some individual stocks. Look at Shopify right now. Shopify is down 77.77% year to date. Now, some people would argue, that this stock's not going to do as good if it's in a recession. Nevertheless, though, this is one of the big dogs. I mean, this stock came from, anywhere from $1,400 all the way down to roughly $300, $380 or so. So this is a huge move. I do think there could be even more pain ahead for Shopify given its insane PE ratio. However, this is just the kind of market that we are currently in. I mean, look at RH. This has to do with the housing market. Currently, I'm not an owner of RH. But, given the circumstances of RH also, I mean, this stock could continue to get hit even more and further down, given the market of the housing market. And, it's interesting because people still have, there's some people that still have that philosophy that the housing market could never crash like it did, or it's not going to crash. And I really, if you watched our prior video, I already told you the housing market is going to crash and we are already most likely in a recession. It's going to start dropping. But at the end of this summer of 2022, there's going to be no debate, no economical debate if real estate is going, in a crash or is going to dump. It will not be debatable at all. Now, look at safety stocks. This is crazy because, we've seen tech get hit. We've seen growth stocks get hit. But these right here are the stocks that your advisors, your people will tell you, invest in these. These are safe. They won't drop. This was on a day where the market wasn't down significantly. These actually underperformed the market. Look at Coca-Cola, down 3.44%. You got Pepsi down 2.27%. A lot of these safety stocks are actually getting hit quite significantly. And this is actually good and bad. The reason this is good is because this is showing that we are starting to get closer to a bottom. When these stocks start to get hit, the stocks that nobody says can go down quite significantly as they are safety stocks, that's how you know. Because at the end of the day, when you're in the middle of a recession or in the bottom of a recession, which I don't think we're necessarily near the bottom yet, I still think there's more pain ahead. But when you are in a recession, everything gets hit. And this is really kind of just showing the bullish theses that we are really in a recession and people are not calling it yet. Now, again, they have not said that we are in a recession, but we've gone over, it's 2 negative GDP quarters. We've already had one. We're about to have another. They are about to call that here soon. But again, I think we're in a recession. I think this is going to get worse. When you see safety stocks getting hit, that is showing that everything is going to get hit, as it always does in a recession, and we're starting to inch towards more of a bottom, but we're not there yet. Now, if you look at this chart right here, this shows S&P 500 bear markets and recoveries. So if you look right here, it'll show the length of the bear market in months, the S&P 500 decline percentages, and the length of recovery in months. Now, this doesn't include all of the bear markets. We had one in 2018 that they did not show. And I don't really think we're going to have a rapid recovery because, again, this is far different from what happened in 2008, 2020, and now 2022. And the reason I say that is because they are going to have to do quantitative tightening, which is going to be pulling money from the balance sheet. They can't inject $7 or $8 trillion into the market to prop it back up in the snap of a fingers now. Even in 2008 and 2009, they were able to inject money. They can't do that now. They're going to have to keep raising interest rates with crazy CPI or inflation at 8.6%, and they're going to have to control these markets. And they aren't going to be able to inject more money because if you get inflation even more out of rapid control like it is, it's going to create economic devastation overall, and they have to avoid that. Now, they're about to announce where they're going to raise interest rates, and I think the Fed's going to do 75 basis points, and then I believe the new 25 is going to become 50 basis points or 0.5%. They have to do this to get inflation under control. This is something they're going to have to take care of, and I actually think the markets in Wall Street wants to see that occur. They want to see the Fed really get a handle of inflation, and the only way they can do that is fight it with interest rates. And again, this is unsimilar. The Fed is not going to be able to inject a multitude of money into the markets to prop us back up now. They already have high inflation. This wasn't the circumstance in 2020. This wasn't the circumstance in 2008, 2009. And again, with the Fed raising rates, that's going to increase home mortgages. That's going to make people that have money are going to be the only people able to buy a house. But why is someone going to buy a house at the top of the market right now in these current economical conditions? They aren't going to do it. Bottom line, period. They're going to wait maybe 6 to 12 months where they can buy that asset vehicle for a 50% discount. That is my opinion overall. Now, again, as we said at this slide, a 75 basis point Fed move is not a slam dunk. Again, I think they're going to do 75, then I think they're going to do 50 basis points. They're going to have to get inflation under control. Now, if you look at this slide, 30-year mortgage rate surges to 6.28%, up from 5.5% just a week ago. Now, this is what I was talking about before. These are going to continue to increase. The Fed has to continue to raise interest rates. Inflation is not under control. They have to get it under control. They have no option but to raise interest rates, which is directly correlated to mortgage rates. So I see a very big increase in those as well. Now let's talk about margin debt. Margin debt's very important to look at. Margin debt is not going to be taken out as significantly with an increase in interest rates because borrowing money is going to become more expensive. Now, with that being said, it's good to see this come down. If you look at this red and this blue, we have had huge margin debt in billions of dollars, and it needs to come down. So I'm happy to see it finally starting to come down, and I want to see it come down more significantly. Now, let's talk about markets overall for the equities market. The S&P 400 mid-cap is trading at about 11.5, which is finally starting to come down, and the small cap is trading at around 11.2 or 12 as well. This is good. We want to see these come down. You know, I've talked about the PE ratios before, and we need to see these come down, so it's good to see that. You can't have these uncontrollable levels at 26, 24, 28 that you're seeing on both mid and small caps. It's just not, it's not sufficient. It's not going to hold. So, you know, it's good to see these come down. This is really creating great buying opportunities in the market. You understand the philosophy and the mindset of Brotherhood Finance. Again, buy low, sell high. Earn, keep, and multiply your money, and you should be buying when others are selling. It's all about psychology at the end of the day while you're investing in the assets. Now, forward PE ratios for S&P 500 indexes. Large caps are still kind of pricey. They're on average about a 15.7. But we're going to come to find the see is large caps are the safety stocks. They're the safer ones. But those are going to start getting hit. Again, those are always the last thing to get hit in the stock market. And then after that, about bottoms, it takes about 1.4 to 2.4 years to see the housing market bottom, which we are going to see as well, most likely in this recession as well. So again, it's good to see these large caps start to fall. Now, next thing I want to talk about, banking stocks. Banking stocks are very imperative to look at. If you look at this banking stock, JP Morgan and Chase, these are hitting new 52-week lows after new 52-week lows. This is showing weakening in the banking industry. I think they will continue to slide, and this is showing that even Wall Street is scared about what is going to happen. Now, the reason I say that is because if you look at banking and you see these stocks slide, it is not good. I mean, clearly, because, you know, they are the main ones that are holding the liquidity or the cash, and when you see these sell-offs, that means that a lot of it is also happening from Wall Street. So I personally see a 2023 and even maybe a 2024 of banking stocks actually going negative and not actually having a profitable year. That is my opinion. We'll see what happens. Make sure to keep cash in the sidelines. Make sure dollar cost average, not financial advice, financial education. Okay, so next thing, again, banking stocks. Look at this. Wells Fargo down 4%, Bank of America down 1.75%, JP Morgan down 1.66%, Ally Bank down 0.87%. These are things you need to look at, keep in mind. You know, they are really getting hit, and I think it's just the beginning. But when banking gets hit, that's how you know there's a problem. That's how you know Wall Street sees a problem. Now, the next thing I want to talk about, brothers, is Apple stock after talking about banking and how I think that's going to be impacted. Apple stock is down 27%. This company just had amazing financial quarter on their balance sheet, but it's still getting hit. This is showing weakness in the markets, brothers. When you look at Apple and you look at equities like this that are getting hit, that have strong, bases, and performance overall, and the market looks at them, that's how you know there's a problem. That is something to keep in mind as well. Now, the fear and greed index is at a very all-time low almost, and I think it will continue to get lower. We are at extreme fear levels right now, which is showing, again, things are starting to get rough. It's really to be expected, quite frankly. And again, this is also something to look at, is the fear and greed index. Same with cryptocurrency, lots of fear, lots of greed. Not really any greed right now, but lots of fear. So that's important to keep in mind. Now, right before we end this video, brothers, again, make sure to go back and watch this video. It's very imperative to look at, growth stocks compared to value stocks and where those are at. Cryptocurrency, the Fed raising rates, how that's going to affect housing. The debate is going to end by the end of the summer if housing's going to crash. It is not a debate. It is a fact. It is going to occur. I'm telling you here right now, and you have seen it in the other videos that we've talked about. If you have not seen our video, The Recession is Here, make sure to go check that out. It's a podcast I did with the other CEO, Mr. Nichter. Awesome value, great information on that one. Furthermore, we're going to see gas prices continue to increase most likely. Again, WTI was about 146% in 2008, 2009. Right now, we're at about 112% up. I think that will continue to increase, and that's also another recession indicator, is when gasoline continues to increase and gets on height or peaks prices. Something important to keep in mind as well. Furthermore, if you found value in this video, please make sure to smash the thumbs up button. Lots of information and time went into this video. Make sure to subscribe to our YouTube channel. Leave a comment. Are we in a recession? Do you think we're in a recession? I think we have been for quite some months now. I think they'll call it here soon. What's your opinions? Go check out some of our other videos on the housing market if you want more information on cryptocurrency, stocks, etc. I appreciate you watching this video and being a part of the Brotherhood. Really means a lot. Check us out on other social medias on TikTok and Instagram, and we have new stuff coming to our website soon. Much love as always. Peace, brothers.